All right. Let's bring in our halftime headliner now. He is Brad Gerstner. He's the founder and CEO of Altimeter Capital. He's live with us for our annual conversation at the Milken Conference out in Beverly Hills. It's always great to have you, especially now. Welcome back.
Hey, it's good to be here, Scott. Thanks for having me.
Yep. The last time you were on with us, which wasn't all that long ago, of course, you were critical of the way that the tariffs were implemented. You called it an own goal. You did say at that time you were buying the weakness in the market, adding to your NVIDIA position, which is your largest. I think people know that. Now we've rallied a long way back. So how do you feel about these markets today?
Well, if you recall, Scott, I set it up. I said there's a debate within the administration between what I characterized as the free and fair trade Trump versus the nuclear Navarro approach. So were we going to land the plane closer to 10% tariffs across the board, about $300 to $400 billion of tariff revenue, or were we trying to go back to a time of McKinley where we replaced the Internal Revenue Service? I think the market realized, and that's why we were leaning into the market, that Trump at his core is a free and fair trader, wants to cut deals, and so the market's up 10, 15% off of its lows over the last 10 trading days because it's beginning to discount that future. Now, we have a long way to go. We haven't announced any deals. We haven't, set the framework for China. I think that's what's next up. We'll see the president on a trip to the Middle East, I think, in a week or so. I expect we'll hear some deals there as well.
Let me ask you this. The secretary in his conversation with Sarah, which I know you were watching from, adjacent to where they were sitting, he said the U.S., I'm quoting him, the U.S. is the best place to invest, and we're trying to accelerate that. There's been some questions, frankly, over the last 2 weeks to a month as to whether the U.S. was, in fact, still the best place to invest. You saw some suggestions of capital flight out of the U.S. I'm wondering whether you agree with his comment, where others would also suggest that there's been, quote, brand damage. It was a Mark Rowan comment this morning with David. It was a Ken Griffin comment of late as well. How about that?
Well, listen, I think whether you love him or hate him, this president anchors his negotiations in a very aggressive place. And I think there are a bunch of people who are beginning to question whether, in fact, he was a free and fair trader, given that we went to 140% tariffs on China. But listen to the president's words over the course of the last couple of weeks. I think all of these folks, they're out here at Milken. I've talked to all of them over the last 2 days. I think we all share this belief that he's going to land the plane. The art of negotiation, you anchor deep, and then you come back from that. But now we have to prove it. We have to prove we can get deals done, not only with China, but the rest of the world. And so, listen, the market's down 4% on the S&P for the year. It's down 7.5% for the NASDAQ on the year. That seems to me to be a pretty fair place to be, given the remaining uncertainty that we have to reconcile over the course of the next few weeks. But remember, tariffs is just part of the story. We have a bunch of pro-growth administrative policies around deregulation, tax extensions, and incremental tax cuts, I think that people are looking forward to in the month of June that could really set the next leg of growth for the economy.
I'll go with your analogy. Are we going to land the plane with both engines intact, or are we going to land the plane with some damage that we then have to rebuild?
Well, I would tell you a couple weeks ago, the market was pricing it like it was going to be that Delta Airlines flight that came in upside down on fire a few days ago. But listen, I think all joking aside, the president has always been an aggressive negotiator. The country knew what it was getting when they voted for him. We'll see whether or not that's an effective strategy. It certainly has caused consternation among some of our allies in Europe and others. But I think the UK will be in front of the line. I think South Korea, Japan, India are lining up for these frameworks. I don't suspect that they're going to be that unusual. I think they're going to generally be a 10% tariff with exemptions. We're doing targeted things to rebuild important national industries like chip fabs in Arizona, steel, aluminum, etc. If that's where it all settles out, I think we will look back at this in 6 months and recognize that this was a huge buying opportunity. But listen, it is a higher risk, higher reward strategy than the last two administrations that came before him.
No, I don't think they knew they were going to get a hugely negative market event. I think that was shocking to most people, probably including you.
Oh, no, if you remember, Scott, I came on and, I talked about it on my podcast, BG2, on February 4th. I came on in January and February. I told you we had taken our risk way down because it was very clear to me that the president was going to embark upon a restructuring of the global economic and trading order, and the market wasn't pricing it in. So I don't think it was that surprising to folks, but Liberation Day clearly set the message that we're going to go hard. I think that event was surprising to the market generally, but now you've seen this walk back up. 10 trading days in a row, the S&P 500 is up. So listen, if you would have told the administration that they could restructure global economic trade, that they could restructure regulation, et cetera, and only have the market down 4% from an all-time high, I think they would have hit the bid. So we'll see, but I don't think the president wants a recession heading into the midterms. I fully expect we're going to see over the next 8 weeks. Like, here's the flight plan. First, we're going to get some of these announcements on other countries, then in the Middle East. Then we're going to probably see a walking back and a reconciliation, at least partially, with China. And then in the month of June, we're going to negotiate the reconciliation bill, which is going to include no tax on tips, no tax on overtime, no tax on Social Security, and an expensing of business investment. If you do those things, that's a $500 billion annual stimulus into the economy. That's what the market is beginning to price in. If this president is as pro-growth as the policies that he ran on, I think there's still upside to the market in the back half of the year. But, listen, we're going to have some chop along the way because there are a lot of balls in the air.
Your optimism is represented in the way that you've been playing the market. You've added to your core positions, seems to me all of them, NVIDIA, Amazon, Microsoft, Meta, Coupang, Instacart, Snowflake, Broadcom, Taiwan Semi, and Robinhood. What does your full exposure look like if it was taken down and then it started to go back up by the last time we spoke? Where is it today?
Right, Scott. You remember, I think, over the last few years, we've talked a lot to the investors at home. At certain times, there are these macro events that mean you have to reduce or increase your units of risk. So think of it as a volume knob. And in 23 and 24, I had 9 units of risk on. So our volume was turned way up. At the start of this year, we turned that down to 1 unit of risk, 1 out of 10. And today we're back up to about 6 or 7 on that volume knob. And those are, these macro overlays, tariffs, changes in regulation and taxes. The underlying stocks, our favorite stocks like NVIDIA, those don't change all that often, but the amount of risk that we have on at any one moment in time has to change. And unfortunately, 2025 has demanded that you're very agile because there have been a lot of changes in these first 4 months. I expect that will begin to settle down. We'll get more predictability. We'll get back out there and rebuild brand America, with some of our allies. I think that begins over the course of the next few weeks.
You obviously have high exposures. I just read off the names of your core positions all over the mega cap arena. We're not going to get NVIDIA for a while, so we really don't need to go there so specifically, other than for me to ask you, what do you think we learned last week from the mega caps and the hyperscalers that you can glean from them into what we might get down the road from NVIDIA?
Well, first, Scott, 75% of S&P 500 companies have reported, and that 80% of those companies have beat their earnings expectations, right? Nobody expected that coming into the quarter. Secondly, all the mega caps, Microsoft, Meta, et cetera, all reconfirmed their CapEx guides. Again, nobody expected that. They're spending and making incredible investments over the course of the next 3 years because they know that AI is the single biggest super cycle we've ever seen in technology, right? Take this stat. Satya Nadella told us last week, just last month alone, they processed 50 trillion tokens. That's 3.5 million years of AI conversation. There's an extraordinary amount of pent-up demand, both by consumers and every enterprise on the planet, and increasingly every sovereign in this room for AI. The president and these companies want the world to run on American compute, American models, and American applications. And we're just getting started. We're in the first inning. This is 2000 to 2003 internet time here. And what we heard over the last few weeks is all of the biggest companies in America continue to double down on their investments in AI, and they're seeing the paybacks.
Did you reduce your position in Tesla or sell it entirely?
Our position is reduced in Tesla as we pull back our position in all the names in our book because of some of this, macro risk that we've been seeing. And, like I said, Dara Khosrowshahi, he's done an unbelievable job at Uber. They have earnings coming up, I believe, this week. Tesla's done an unbelievable job navigating a very tricky global backdrop, right? Imagine they're in the center of the bullseye of these tariffs. They're in the center of the bullseye of the negotiation with China. They're in the center of the bullseye on, U.S. auto tariffs that the president announced early on. So it's tricky, but we believe in full self-driving. We think they probably have the best full self-driving technology in the world. And it's clear, you look around Los Angeles on any street corner, you're now likely to see 2 or 3 cars with no driver in the front seat. One of the biggest transitions of the next 5 to 10 years will be the multi-trillion-dollar transition to autonomous driving.
You didn't mention brand damage caused by Musk, which some have suggested is going to take a long time to fix, if it can even be fixed. Sales, if you look around the globe, are obviously down significantly, I think even to a degree that have surprised a lot of people. Did that factor into any reason why you reduced the position?
No, listen, Elon has always been controversial. I think the work he's done in D.C. in reducing, with Doge, reducing government bureaucracy by $50 to $100 billion a year, we'll look back on that as a great gift, a great kickstart to some of the changes that needed to get made. But frankly, he said he's going back to his companies full-time at Tesla, full-time at SpaceX. Listen, the Chinese want to own global autonomous driving, and they're running the table around the world. So it's very important. If the U.S. wants to compete in global autonomous driving, we need him at the helm of Tesla. And he's told us that's where he's going. So I think they're going to do just fine. But we are at this moment of, I've described it as the fog of war. And when it comes to Tesla, to self-driving, to, the Chinese auto industry, I think there's still a lot of uncertainty in the world.
You think, though, that the sales issues that we've seen, especially overseas, can rebound when you say you think he's going to be fine?
I think it has a lot more, Scott, to do with the competition with China and places like Europe. Do not underestimate Huawei. Do not underestimate, when it comes to chips. Do not underestimate Huawei when it comes to self-driving and autonomy or any of the other major Chinese companies. They are very competitive, and they're determined no longer to be just Chinese players, but global players. South America, Europe, Middle East, Africa. If we want the U.S., compute and U.S. technologies to be predominant around the world, the way we did in technology, or the way we did in the internet, then we got to go full speed ahead. We got to stop worrying about how everybody else is running the race and how we keep our technology from them. And we need to diffuse American technology as aggressive as possible around the world.
All right, let's take a quick break. You stay with us. Sit tight. We'll do that, and we'll come back. I want to get your reflections on Warren Buffett. Obviously, you spend a lot of time out in Omaha. We'll talk Invest America, too, which could be getting closer to the goal line, and other stocks that we want to run by Brad Gerstner as well. We're back in 2. Back with our headliner today, Altimeter's Brad Gerstner, live from Beverly Hills at Milken. Joe has a question for you, Brad.
Brad, good to see you. I know in the past you've owned other sectors in the market besides communication services, besides technology. We're talking a lot about those types of names today. Just give us some insight if you think there's opportunity, whether it's healthcare, industrials, financials. We've got stocks like Spotify, Netflix, Palantir, all racing towards all-time highs. How are you thinking about all that?
Yeah. Good to see you, Joe. For sure. Listen, the internet sector, you mentioned a few, Spotify, Netflix, et cetera. Some of the names we've owned there have had great runs this year of 20, 30, 40%. I think they've been safe havens, a little bit tariff trade, stocks that people wanted to get into. I think some of these other names in the U.S. economy also safe havens. So I think you have to be a little bit careful, because as money begins to trade out of those safe havens, as we get some trade deals announced, the companies that have underperformed due to the tariffs, I think will start to outperform. But generally, the S&P is only down 4% this year. People still expect double-digit S&P growth. I would say there's still a lot of disruption coming to the economy. There's going to be a lot of alpha. This is a stock picker's market. This is not a market just to own the index and go to sleep. There are going to be some companies that are helped by the tariffs, some companies that are hurt, some companies that are accelerated by AI, some companies that are hurt. So active managers get paid right now to do their job. Find those companies that are going to benefit and avoid the companies that are going to get hurt.
Since you talked about a stock picker's market, I wanted to ask you about the greatest stock picker who's ever lived. His name's Warren Buffett. And of course, this weekend, everybody is reflecting now on his announcement that he will no longer be CEO at the end of this year. I know you've been to Omaha, and I know you know some of the people out there. I'd love to just hear from you on what you think his legacy that he leaves behind for people like you and others who are trying to invest in this market.
Yeah, it's when I saw those words from Buffett on Saturday, I was both happy for him to go out on top. 20% compounded returns for 60 years. We'll never see a GOAT like Warren Buffett. He was one of a kind. But most importantly, what you can't put on a spreadsheet is that Warren unlocked the potential in folks like me. I grew up in rural, small-town Indiana, and I saw somebody in Omaha who sounded like people around me, who looked like people around me. He inspired me to start tracking stocks when I was in high school. It really inspired a generation, inspired many generations, a nation to invest, to understand the power of long-term compounding, to understand the power of investing in the upside of the American economy. He was a personal hero of mine. I was lucky to get to know the organization later in life. I came on, I think, your show just after Charlie died. And I said the two of them, they've always spoken truth. They've always spoken wisdom. Just this weekend, he said, free and fair trade, right, has been the most powerful engine for prosperity on a global basis and this country for the last 50 years. It's still the greatest country on the planet. He believes that deeply in his core. So I wish him the best. He's not going anywhere. He'll continue to weigh in on the important issues of the day at Berkshire Hathaway. But salute to Warren. It really is an incredible career. But it wasn't just about investing. He moved the country forward. He gave the country reason to believe. And in our most trying times, in the times where the country was beginning to lose faith, I remember the fall of 2008. He settled the market at critical moments in time. And so this nation owes an incredible debt of gratitude to Warren Buffett. And I was happy to see him go out on top like he did on Saturday.
He leaves an oversized legacy. It's really hard to quantify it obviously. But in a way, you're thinking about your legacy too, and the future investors and people in this country through your Invest America program that you've talked to us on numerous occasions, and I know you're dealing with that out there to some degree. The idea, of course, for those who may not remember, is giving every child born in this country an investment account, $1,000 funded by the government. That's the key, funded by the government, because that means you need help to get this done. Where are you in terms of getting that help you need, as we are talking about a reconciliation bill and the Republicans trying to get their budget and their spending bill through Congress? So are you close? What can you tell us?
Well, I'll tell you, we're making incredible progress, and I think we are going to get it in the reconciliation bill. But, tying this back to Warren Buffett, nobody understands the power of compounding better than Warren Buffett. And now is the time. We have 70% of Americans who feel that they're left behind. They don't have accounts that compound. We need to get them into the game. So it's $1,000 at birth, seeded by the federal government, but private accounts. 3.7 million kids born a year, they each get a private account. Think of it as a 401k from birth. And we have companies like Uber and Dell and many, many others, Oracle, NVIDIA, etc., who all say they'll contribute to the accounts of the kids of their employees. We have philanthropists, major philanthropists, who are donating billions of dollars to this if we set it up. We have states like the state of Connecticut or Ohio who will add to these accounts. And of course, parents will add to these accounts. So by the time you're 18 years old, you will have an account in the S&P 500 that's worth upwards of $50,000 to $60,000. It changes the game by getting everybody. This is the president's Main Street agenda. The White House is very much aligned with this. The Senate is very much aligned. You know, it's led in the Senate by Senator Ted Cruz and Haggerty and Booker, Warner, and others. A big bipartisan group, but Ted Cruz is helping to get this scored, helping to get it in the reconciliation bill. We got a lot of support in the House. Again, bipartisan support led by the Speaker of the House. So I fully expect that we're going to get this into reconciliation. Imagine this. If the president signs this into law as part of reconciliation on July 4th of this year, that means on our 250th anniversary, July 4th, 2026, we can have 40 million children, 40 million families. They can open up their phone and see their child owns a little slice of Apple, of Berkshire Hathaway, of Microsoft, etc. I think that's how we really make this a Main Street economy. We know this is the most powerful economy in the world. It's high time that we get everybody into the game, but not on the back of a bigger government agency or a big government account. On the back of individual accounts. Make everybody an owner in the upside of America. Warren Buffett would give that his stamp of approval.
All right, you keep us up to date on how that progresses. Your CEO council just littered with the biggest names in business. Barton and Benioff and Safra Katz and Michael Dell and Jensen Huang and Bill McDermott and Dara and Laurene Powell Jobs, and I left many off because there are just too many to name, but that speaks to the kind of corporate support that you have gotten. Let us know, and we'll see you again soon. Brad, thanks.
Thanks for having me. Thanks for having me.
Brad Gerstner out at Milken for our annual out there. Contessa Brewer has the headlines now. Hi, Contessa.
Hey there, Scott. Israeli Prime Minister Benjamin Netanyahu said a new offensive in Gaza will be an intensive military operation to defeat Hamas. In a video posted on social media, Netanyahu did not share details of how much territory would be seized in the enclave, but said the population would be moved for its own protection. Officials earlier said Israel could seize all of Gaza in an expanded operation. President Trump said Sunday he will direct the Bureau of Prisons to reopen Alcatraz prison to house the nation's most ruthless and violent offenders. He said he wants it to be rebuilt and expanded. In his post, the president referred to, quote, radicalized judges, his words, who have, he said, they want to have trials for every person in the country illegally. The notorious facility was closed more than 60 years ago because it was too expensive to operate. Now, of course, it's a national park. A record-breaking 21.8 million viewers tuned in to see Sovereignty take home the $3.1 million prize at the Kentucky Derby Saturday. The race aired, of course, by our sister network, NBC. Streaming platform Peacock also brought in the highest traffic of all partnered streamers. This year, Scott, there was a lot of mud. Attendance was lower than last year, but the betting 11% higher. That's pretty significant growth.
Yeah, no doubt. Yeah, it was sloppy. For certain, but it was exciting nonetheless. Contessa, thanks. Contessa Brewer. Coming up, we have fresh trades in the energy space. Oil hitting its lows for the year today. I'll tell you what they are next.